Good evening, everybody. Welcome to the live FB like we always do as part of our month of August. How time really passes very quickly when we are learning a lot of things, right? What's happening in here. And for those of you who has been following me on the Facebook as well on YouTube, we thank you for your support, and you probably know what are some of my earlier message that I did in June and July. If not, let me summarize it for you tonight. And definitely some of the things we talk about in here got to focus on the US market, as this weekend on this coming Saturday I will be doing our master class, and my portion of contribution to the VSA group is the US market and portfolio, how to master the market. So this is something of a very interesting information that we may want to know that will help you to get that new opportunity. And thank you for sharing tonight. Those of you who have in this talk that we in here, thank you for sharing this video timeline, and let's get started, shall we, in here? Okay, so tonight it's on the US market in here, and what we want to focus on is the US largest wealth transfer. That's right, the US largest wealth transfer is already ongoing. For in case you don't know that, right? I suppose many of our Malaysians are still investing in the Malaysian market, but actually the great opportunity is in the US market if you just know how to do that. There are some local brokerage can also help you that, but of course the education segment of our VSA will definitely put you into the right spot. And that's why tonight I want to cover this very important topic that will put you into the new wealth, at least for 2021 going forward. If not, this kind of information may let you know where we are right now and what are the condition, likelihood the market's going to be in here. So thank you for sharing, and we do hope that going forward there will be more people that will find out about this. Now let's take a look at what we have. Don't forget to subscribe to our YouTube channel in here for more information and things that we always talk about right now. Now for our month of August, as I said before, just on top of in here is the largest wealth transfer right now. It's happening in here, and let me prove to you by facts. And for those of you who have listened to me much earlier in May and June may realize that if you have gotten into those positions, you would already be in the money in here. I think very important is that when we get the education, what are we going to do about it? I think that's why the VSA 360 and also the community continue to support for those of you who are really interested in the education in here, and definitely some of those information will probably put you in the right spot. Let's take a look what we have to now. Now you probably be thinking about it, and you're trying to make money in the stock market after seeing the Malaysian market, and some parts we will talk about will be including Malaysian market. After all, the KLSE does take its hint from the big brother, the US market, and you're looking to find some sort of market timing in the US market in here. But over time, you're finding the market is correcting now. You know, I wanted to buy Apple, I wanted to buy Tesla, I wanted to buy PayPal, I wanted to buy maybe Berkshire Hathaway stocks, I wanted to buy some cryptocurrency, right? But the market is correcting now. Are they still many of these opportunities? So we will examine in here. Or maybe you already been late, and should you listen to what I have to present to you? Now, of course, as I said before, if you have listened to me previously in the live FB way back in May and June, that's why it's important for you to smash that subscribe button to our YouTube. Then you're able to follow some of our talk that will put you in the right spot. But I will show you what are things we talk about in May and June in here. Now, of course, the bear market is constantly ringing on top of people's mind, and people were wondering, hey, what is this happening in here? Is this a market that is going to have more bear market to rally in here, or are we going to be seeing a bit more? So right now, you want to know whether this bear market, is this rallying, or would it perhaps loses its steam and continue to follow? What is actually happening? After all, we already have 4 down bar since the market hit peak, right, which I've talked about in here on the previous breakfast show as well in my morning podcast in here. But let me prove it to you that this is now the largest, biggest opportunity or wealth transfer which is happening right now in the US market, and you don't want to miss out for this one in here. So let me give you the facts. So tonight what I'll be sharing in here is the largest wealth transfer in the US market using the Pentagon guided criteria portfolio to be able to differentiate between bear market and bull market. What do they have? What are the characteristics of these idea in here. And how does a bull market look like? How does a bear market look like? How much does the market go higher? If it's a bull market, how much the market go lower? It's a bear market in here. And knowing the timing in here. And more importantly, knowing where the money is flowing, as in the traditional of volume spread analysis, where we look at the market stages, looking at stage 1, which is accumulation, stage 2 markup, stage 3 distribution. These are where you want to follow the smart money thinking to buy on the green pentagon and selling it at target profit. And again, you can apply it to all markets in here respectively, and it's very, very suitable for beginners, intermediate, and also experienced. But right now, this market is undergoing lots of market volatility, and that's why we recommend you use our VSA 360 Pentagon Guider to do some sort of bottom fishing in here. An excellent tool where you're able to buy low and sell high. So this is where you want to be, from having no money that you see on top there to having money in your pocket. How many of you like that? If you like that, pencil those in and give me a thumbs up for the incredible information sharing that we're doing tonight in here that will put you into the right spot in here. Now let's take a look at what I've said previously on the 18th of May, which I did a talk at that time on the 18th of May, that the market bottoming is rapidly approaching time to buy again. So that was on the 18th of November. And if you look from the chart here, this is the 18th of November, and you could see this is where I started to talk about it. And remember, we don't have a crystal ball. We are just relying on the green and red pentagon. And so far, we were at this junction in here. We know, right? Partly is because how much the market has fallen. No doubt, at that time, we were very close to the bottom. Actually, the bottom was at around 30,000. We were somewhere around 31,000. Just very, very short in here. And since then, I also communicated and also update to you. Those of you who've been following me on my breakfast show and also on the YouTube, you will know there was constantly update that we have in here. It pays dividend, and our show is completely free. And of course, it is a beneficial for me to support my fellow members and my fellow trade VACN here. All right. So if you look back on the series of video which I did from the 18th of May until the 14th of July, I was already talking how to find reversal right on the 6th of July and 4th of July, how to do bottom fishing, and then the first sign of market uptrend, which is on the 22nd of July. If you look very closely, 18th of July was where the market is bottoming. 15th of July was market bottom reversal in here. If you look closely, how do I do that? Because I was using the Pentagon Guider. You could see here when the market turned green pentagon in here, and this is something that you can do it also at your home with the downloaded app of SMARTRobie that will put you into the right spot. You can see from here onwards, the market could hold on to this level in here and able to push up all the way, right, from the green pentagon. But as I said before, much earlier on, we already been telling many of our members in here to start buying from this level to the 34,000 level in here. So let's look at some of year 2022. What actually happened? What were the bear monster that actually came through? I think many of you have known. The first one is definitely inflation, right? We all know inflation skyrocket, right? Your nasi lemak used to be maybe cost less, and prices of food, petrol has gone up. Of course, we in Malaysia did not feel the brunt of the petrol prices, but those of you who have gone overseas or started to pump petrol, especially those who are listening from Singapore and Australia, my brother keep telling me the petrol prices is almost 6 ringgit to 1 liter compared what we are paying, only 2 ringgit. So we are actually paying a lot more. After all, we don't really feel the blunt because many of our items, consumption items, are subsidized by the government. So in that way, we were very, very lucky. Now, of course, those of you who have felt the inflation has gone up, and many countries, especially in the context of the US, they are also feeling the pinch. So from here onwards, they could see also they have to raise interest rates to fight inflation. Now, remember, inflation is a process or steps where prices continue to go up without giving really much value into it. So the central banks and the US FOMC can only raise interest rate to fight, so to reduce the consumption in here. And of course, we all know the uncertainty of the war. So if you look from this chart, inflation was starting around, let me just bring up my pen here, started around 2%. That was really the basis, 2%. And it was below 2%, which is early on during the pre-COVID period, right? The US Fed, they were concerned to bring the 2%, right? And then the market started to run off, and then the US Fed started to talk about transitory, all right? Transitory is a term that they use, this one, temporarily only lah, right? Temporarily only for how long? Temporarily for maybe 4 to 6 months. But after it crept through the 4% and started to run until it just hit peak here on the 31st of July, where it hit 9.1%. on 2022. So last month, which is, this was in May, okay? This was in May, and last month on 31st of July, the market may have peaked because it was at 9.1%, it's gone to 8.5% in here, which is now. Now remember, this coming month end, which is only about 7 days more, we will see the inflation coming out. What do you think the inflation rate? Is this going to be greater than 8.5? Or it's going to be lower than 8.5. What do you think? Let me know. Type it out in the comment in here. Now it's important. Let me just highlight. If the inflation were to be higher than 8.5, then they will see the stock market goes down. Okay? The stock market. If the inflation, all right, were to be less than 8.5, you'll see this market going back higher. So there's two distinct movement here. Up, and this is going to be down. So keep that in mind. So that's something for those of you who is following the US market. You want to watch this as the inflation rates which come out. You can also get it also from the trading view I'm going to share with you. So you can see from top here is the US, the United States inflation rate. Just type in inflation rate on the stocks and you're able to find it in here. Now, having said that, let's go on to the next one, is the uncertainty. All right, let me just remove the all the drawings here. Right, is the uncertainty. Now remember earlier on when we got out from the COVID, right? COVID in 2022, COVID here, right? The market was really growing. And then all of a sudden, the war came in, right? And the market was going through a period, we just talk about inflation in here, that it hampered the economic growth of it. As such, there were two negative growth, minus 1.6 in the first quarter, right? And 0.9% in the second quarter of the US. And technically, when you have two successive negative quarter, this was the COVID, okay, in 2020. All right, so you have two negative successive, and then the market rebounded back. So this is where you see another one, and this is where we call this a recession. Now the question is, this recession, many analysts has looked at it differently. Some will say that this is going to be ongoing and ongoing, that this bear market which is experiencing right now, the market in here, is going to go lower and lower. So what do you think? So this three bear monster which is bearing down on our market is causing why the market it is today. Now, no doubt about it, our market as well as the US market has been the bear market for the last 6 months. So right now we're going to be going to the differences between the bear market and the bull market and some of its characteristics. So I do hope that what you're watching in here will give you good information that you can use in your market timing in here. Now give me a thumbs up if you like what you've seen so far in here. Now let's take a look at what we have on the good news. All right, let's take a look at the good news. Certainly one of the good news we have seen right now is correction. Now every time when we have a correction, right, going back to as far back to 1927 in here, right, you can see here market once it corrected, what does it do? Right, like a rubber band, when you pull that rubber band, it will always snap back out. And that's the same thing too happening in US market. So the market usually will recover. Now, if you look at this, if you have missed the COVID-19 crash in March 2020, right, this is a very good chance in here, right? Because what happens after a bear market is that we get a booming market. That's right. That's the end. If you look back history, going back to 1945, of course, the present three bear monsters that I talk about: inflation, interest rate, the uncertainty of the recession, it's here. That's what's causing this bear market. But if you look over a long period of time, right, and of course a lot of people say this time is different, right, not like the last time that but if you think very closely, if all the unknown has already been out, eventually the market will recover. That's the fact of it. If you look at this, the current one, right, where we have the last recession was in the last recession, let me just bring up the pen here and write a few points. The last recession we have, was on February 2020. So that's the one the market went up by 50%. On average, the first year is about 18%, but on plus 3 years onwards, it's 46%. Now we had one in 2020. Now 2022, we have another so-called bear market in here. So we are looking a possibility between the 18% return going once the market recover now. But I'm going to give you a couple of scenarios going forward in here. And of course, on me here, let me just move to the side here, is about 120% after 5 years from here. And this is why we call the largest wealth transfer is happening right now. I know some of you are very fearful in here, but let me share with you the numbers in here. Now in 2019, where we have the global financial crisis, GFC, the global financial crisis, we have the COVID. Now we have this inflation monster for year 2022, which never seen before, inflation monster lah. So we already has a special name, right? So all these are giving you post-recession. After the recession, the market is simply going to run up. So remember, if you miss out on the COVID-19 crash way back in March 2020, your chance is right now today in here. So don't miss it in here. Now, of course, there will be pain, right? When some of you are still holding those shitty stocks, it's going to be pain. Now, if you look back, let me just move this chart a bit up so you can see it here. All right, so if you can see this, let me just move this aside here, and you can see on top of me here, the average drawdown, any major recession they've seen in US, it's about 30%. And right now, of course, if your portfolio will be feeling the same, but do not be afraid. I think the whole bottom around in here is that there is sunshine after a storm. Always remember there is a sunshine after a storm, right? So you look back at the historical level in here, maximum drawdown, the market will rebound back. If you look back at the previous slide, after 5 years plus, the market may go up as high as 120%. So it takes a long view in the market. If you're shorter term, you want to be trading with the Pentagon in here, flow with it. When the market is long, you want to go long. If you're short, you want to stay out with it. But in the US market, you can also short with it. Very important is to have a distinctive trading plan in here. All right. So let's take a look at what we talk about the sunshine after a bear storm. All right. So after a bear storm, you look back at the US recession, right? How long you have taken now on the last COVID-19 in March 2020. Now, that was one of the shortest recession that we, so-called US recession, which is about 2 months. Now, technically, the US are already in recession in here, and you could see the market is also down about 30%, and that was down 30% on average, right? Just saying average, if we take all the bear market. Now, remember, no two bear market look the same. The one that we saw in COVID 19 way back in March 2020, it's going to be different from this inflation monster recession that we see right now in here. It could be, now on average it's about 10 months, so you cannot think of it, oh, this recession is going to be for 3 years or 4 years. No, on average about 10 months. It can be maybe 2 months, 8 months or 6 months. But I'm going to share with you the current inflation we have seen. We are already in it almost 5 to 6 months in here. So if we take a law of average, we are very close to seeing the sunshine, seeing that beautiful flower after that bear storm that we had. And after that, market generally will go up. And of course, during this S&P 500, if you take into the period, right, average is about 1.7%. Taking the bad one, the good one. So it's very important that you're able to do that market timing in here. Avoid the recession. Of course, those of you who avoid the recession would have got out and started to trade following the green Pentagon or red Pentagon, depending what is your strategy here. And I do hope that you will share your story with me, just like many of our VSA members who have did that, especially on the 20-day trading challenge, which I'll talk about it very shortly in here. So of course, the stock market, now bear in mind, the stock market in here, it's important is what I want to talk about is a forward thinking, okay? It's a forward thinking instrument. So you always have to think forward. Now, do you buy when the news is confirmed? Definitely not, right? So right now, when the news is still bad, when people are talking about likelihood of raising interest rate, going to be high inflation, this is where you need to take action, right? Stock market is a forward instrument. You cannot buy that everybody already confirmed, just like previously when the market going higher and higher, right? You buy when there's confirmation, you're not going to be. Just like in May and in June 2022, I talk about the market bottoming here. So that was the time. And how do I know that? Use the Pentagon Guider. So if you have the Pentagon Guider, that will put you into it. So right now we have seen already, if you check out the VSA 360 as well in the SMARTRobie in here, the red Pentagon, both from the Dow Jones and also from the KLSE markets, it's already out. So VSA, Pentagon Guider, is a forward-thinking indicator, much leading indicator compared to everybody else in here. All right. So how many of you agree with this statement? Okay, if you agree with this statement, just type it in there. Okay, if you agree with this statement, just type it inside there. How many of you think that the stock market is a forward-thinking instrument? You gotta think forward, you gotta think ahead, you cannot think backwards. That's why a lot of people who usually uneducated, unskilled, right? They haven't been following up. They used to think backwards. They wait until everybody buy first. So by the time they do, it's already too late. So forward thinking, ladies and gentlemen, make sure you keep in mind. Now, that's why we recommended buying the dip. Okay, buying the dip with VSA method. If you have the VSA method, you're able to buy the dip, then you have that confidence here. Let's talk about buying on the dip in here, which we talk about it. When there is recession, you can see here, 1 year plus 50%. And then 3 years from now onwards, averaging about 46%. And then, of course, if I just move over this side here, you can see it's 120%. So buying on the bottom, what we call bottom fishing, buying on a dip and buying on the post-recession. But you got to have that confidence, and that comes from our member who joined our program. Now, for those of you who have not joined our masterclass, this is something definitely through this period of the next 12 to 15 months, through our masterclass, we're able to guide you through our VSA 360 to able to coach you and explore new opportunity like you never seen before. And that's how some of our students are doing. That's why you see our 20-day live trading challenge, many of them do very well. And if you have not done well, ask yourself, what have you done in the last 12 months to improve your skill and your knowledge as an investor or as a trader? With VSA method, I'm definitely sure you will be much more confident in buying at the bottom, buying at the dip, and buying in recession. And that's why it's this largest wealth transfer. Now let's take a look at the whole point of the year on the US market in here. We talk about the bear and the bull market in here. Of course, the best one was the 1990 bull market, went up to year 2000. That was in 118 months, almost 526%. The last run that we have from the global financial crisis way back in 2009, right? We have this almost 123, 417%. Every time when we see a big bull market, all right, you will see a bear market. And you can see the interest rate, okay, this interest rate you can see started to move up. I will talk about interest rate, so catch up. This yellow line here is really interesting. But I want to draw your attention right now to the shortest bear market. Now, there were two shortest bear market period in the US market. That was in 1987 and 1990, right? Right now, and how long were they? If you look from on this side of the market in here, the market was down 30% for 3 months, down 15% for 5 months. So those are the numbers you want to be looking at. So right now, the US market is down roughly about 36%, depending if you're looking at S&P or you're looking at on the Dow Jones in here. And we are in the period of 5 to 6 months. So year 2022, we are at 5 to 6 months. And remember, the average is about 10 months. So we are very close to the end. And remember, stock market is a forward thinking. This is where the wealth transfer is happening in here, and you need to take action. My question to you is, what kind of action will you be taking going forward in here? So in here, we saw the two shortest period bear market was in 1987 and 1990 in here. All right. So if you look back, all right, no two markets are the same. So my summary in here, you can see above in here, there are 14 occurrences going back to 1948 and 13 bear market. So they're about the same, 14 and 13. So every time when you buy the bull market, you must always think there's a bear market. So when you buy in the bear market, there is always that's right, the bull market. Every bear you get bull. So that's right. It's happening right now. Buying at the recession, buying the dip. And this is why we are so excited in here to share with you. Of course, not many people want to listen to the news. They only want to come in when the market has run up. That is why, ladies and gentlemen, 98% of the people will only buy, right, when the market is confirmed, because they are not thinking right. They don't have what it takes to be in. For those of you listening, especially our student in here, you are already in the top 5 segment of the investor and trader, and no surprises why you're able to do so well despite all the market is. Now, of course, if you look into this, the percentage of time in economic recession is about 51, but I just want to draw your attention. This is another statistic. The bear market is about 13 months, earlier was about 10 months, and the length of the wing is about 15 months. So when we have a nice bull run, which I talk about previous episode, the new bull market in here, I'm going to give you a couple of scenarios when the new bull market in here, and cumulative returns in the bear market was about minus 25% in here. But take a look at the print. Remember, in the stock market, there always be winner, there always be loser, right? Winner must be more than loser. Now, if you look back in the last 5 years or 3 years, what has been your result? Share that with me in here. Have you been winning more or losing more? I'd like to hear your idea in here. I hope that those of you who have been following me a fair round would have known this. Now let's talk about the impact of interest rate. All right, the impact of interest rate in here, and let me just push this up a bit so you can see that too. All right, so if you look from the impact of interest rate right in here, you can see I want to focus on, since we are talking about inflation, right, we are going to be doing what? Raising the interest rate or lowering the interest rate? What do you think? Right now it's going to be happening in the month of September. Yes, it's going to be raising interest rate. Now the question is how fast they're going to raise or whether they are steady. Now if you look back to the history, all things being equal, when the market has a steady interest rate, stable at zero, this is where we have cheap funding. You can see the cumulative growth of the S&P 500 is 39%. Another one, steady growth in 2009, 15%. Then another one, steady at 5% was 17%. So all things being equal, that's what people are looking into the Jackson Hole meeting, which is the US FOMC. Jerome Powell is talking about. The last round they raised was a 75 basis points. So they want to make sure that the increase on the interest is pretty much the same or maybe lower. Okay, now you notice the biggest increase here in the model time 2004 from 1% to 4%. You can see this is where the Dow Jones drops off a bit, or the S&P 500 drop. Then the next one is also increase, where from 0 to 2.5% is 12% return. Okay, 12%. It is still a positive return. So the story here is this. Okay, whenever the Fed raise interest rate, is either how fast or how slow. If they raise steady, all right, just keep it maybe at 50 basis point, this nice round in here, you will see this stock market again going higher. So all things being equal in here, raising interest rate will raise the stock market. If the market has undergo its bear market in here, there's no more recession in here. And remember, the job numbers in US are very, very promising, somewhere between lower than 4% unemployment rate. So that is actually a great number in here. So remember, steady or versus rapid increase in here. Those are the two key things. So where are we right now? Let's take a look, which I've talked about and try to summarize in here. This coming weekend, which is the 31st of August in here, interest rate hike. That's going to be likely in September. So a lot of the markets are waiting, anticipating the meeting minutes or at least a statement by US Fed Chairman Jerome Powell. What is he going to be doing? And this is happening in Jackson Hole in Wyoming in here. The inflation figure will be released in end of August 2021. And of course, if a lower interest rate, which we talk about less than 8.5, the market is going to fly. If the interest rate is going to be higher than 8.5, 8.7, then you see the market strength. But right now the market is dropping, so it is anticipating a corrections in here, which I'll talk about shortly on the next slide in here. The US market so far in this bear market rally, assuming we are still in the bear market in here, we haven't come out from a new bull market in here, the US market has rallied 15.5%. The KLSE also not bad, has rallied almost 9% from the market bottom in here. Now, of course, keep in mind, anything we are looking at 20%. If the market has rallied to 20%, above 20%, then it's a new bull market. We cannot call it bear market anymore. That's where we talk about forward thinking, this idea. So do you have this forward thinking idea or not? If you have, type it in there. I want to make sure you have this forward thinking idea all the time in here. All right. And remember, the US and the KLCI both technically halted at the technical 200-day moving average, which you call the GWC, the Great Wall of China. The 200-day moving average is the stopping stone that prevents this market from going higher, because they haven't cleared out. They still want to know whether the next technical recession is coming, not at least in the Q3 in here. But let me share with you further on what I think about it. I'm going to build a scenario. Now this is the US Dow Jones, and for those of you who have the VSA 360, thank you for your support. If you're not, you want to subscribe to this, you'll get all these great indicators where you can see the market stages right below here, and the peak valley. You can see the peak valley in here. Last round when the market broke down to 38%, rally 61%, came down 11%, and then came down 5%, and this time came down, and you notice, right, unlike this is the 200-day moving average, right, it hits here, right, and the market rebounded back. All right, this is on the weekly chart, so you can see the market went up about 15%. It went down 19%, went up to 15% in here, and right now that will be the temporary stops. You will hold first. It's been down for the last 4 days before moving up. Now what we want to do here is looking at retracement for likelihood, the pinpoint the area. Now always take note, we are looking for sign of weakness. Now those of you who do not know what I'm talking about, sign of weakness, this is one of the bullish indicator that you can find on VSA. So check out some of our YouTube in here for spring. So what we are seeing, if you notice here, whenever the market has formed some sort of base, there's always a spring here. You can see there's one spring, there's another spring, there's another spring. So you can see spring, spring, spring here. Right now we're seeing this one spring, but not good enough. We also want to have used this retracement. Usually retracements are very, very accurate based on my experience and from my own personal back test. They always want to retrace back to 50% or 38%. Okay, 38%. You can see this one is a 50% retracement. This is 38% retracement. All right, so we haven't reached the 38% retracement yet. That means this market, beside 31st of August, we still got 7 days more, so make it take about 5 more days. So the market will drop until this level here, 32,473 or 32K. So remember 32K or 34K, where we see, what do you want to see at that level? Look for sign of weakness spring. Look for sign of weakness spring when the market will rebound, and of course we want to see volume also lower down in here. So that is what we call a projection going forward. Okay, now let's take a look at the 38.2. Very similar. At 38.2 is actually at the 32,000 here. Previously we are looking at 32K. Okay, this one is looking at this is on the Dow Jones is 32.4K. So this is 32. So just another 400 points. Very fast on, you can hit and then slam back up again. All right. So we are very, very close. Give it 1 or 2 more days. Now remember the Dow Jones, in this case, you can see how many days has been down? 1, 2, 3, 4, 5. 5 days already. And it hit the ceiling. Hit the boom boom, hit the ceiling, then come back down. That's why we are seeing in here. So I'm giving you the likelihood where the market would make a support, maybe around 32,000 or 32,400 level. Let's see tonight how the Dow Jones are holding up. But we can also check it later on. Now let's also look at the S&P 500. Very, very similar, very same story. You can see, right, at the 50% level, we are talking about almost 3,988. Right, that's the level in here. And again, you want to take it from the base of the peak value. This is an indicator we'll give to you in here. Once you subscribe to our package in here, you can see right at the bottom, you can see, so we have 39.88. That's the level we are looking for. So right now there's still a bit more room for the market to fall, so make no mistakes in here. This is why we want to do the market timing. All right, I'm going to tell you when you're likely going to be buying too by looking at the VSA 360 seasonality return in here. So that's why our members are able to have that edge right, into the market in here. So you can look from here, 38.2 is around 4,070 in here. So give and take, the market is going to fall some more in here. Right, at 38.2 for here. And also take note of the market stages right at the below here. So market stages, we want this to turn back and hit this green line here. So right now this market is still pretty much in a nice uptrend. We call this a pullback. Pull back to 50% or pull back to 38%, and then the market will go back up. So what we call a higher high, higher low. So keep that in mind. And we want to couple it with sign of strength. So you all know, right, the condition we are looking for, 38% or 50% with support level at using spring, all right, because we can see the last round, these springs are very, very valid. That will be the area if you want to do some timing and buy into that. Okay, so let's look at where the market right now, currently the KLCI market. So the KLCI market right now is correcting, and because it is anticipating the US inflation and interest rate hike, the geopolitical situation right now we are seeing as the Russian and Ukraine has turned into a phase 2 or maybe a phase 3, and we have seen those missiles being launched by Ukraine hitting Crimea. So who knows, likelihood that will the Russians strike back with pre-nuclear warheads? That we do not know. If those do we start fighting with nuclear warhead, right, that is a really danger zone, and I will present another scenario in here. So right now the S&P 500 key level is 50% at 3988 or 38% at 4079. Now for the KLCI, we already hit, right, the 50% level. You can see KLCI panic first. For the S&P 500, even haven't panicked yet. 1469, we are already there. We hit the 50%. And once you hit the 50%, we give it a bit of leeway, it can go down to 1454 at the 61.8% in here. So that's the next level we are looking for. If the market do go down 1454, that's about it. And if you do break down, no more bullish run, right? That's completely the end of the market in here. So let's talk about the best scenario going from September onwards, okay? Now let's say we have this point, the wealth transfer in. The inflation already peaked on the 31st of May and started to drop down to 8.5% in here. So for this month end, let's say we have less than 8.5. If it's market less than 8.5, what do you think the stock is going to be? The stock is going to go higher or go lower? If it's lower than 8.5. That's right, the stock is going to go higher. All right, so I do think that generally based on the crude oil prices started to moderate in here, and then the interest rate rise. Now always remember, US FOMC Fed chairman has been very accommodating. They know they also benefit, especially this year, November. They have the November election, all right? The midterm election. They don't want the stock market to go down. This is where they want Biden to win. So US FOMC Fed chairman don't want the market to fall too much, so they will steady the interest rate. Makes sense, right? They're not going to raise the interest rate so fast. But of course, all the market analysts wanted to put so. But the last thing that we are looking for is the sign of the new bull market. Only and if we move 20% from the old high. So right now we talked about earlier on 15.5% for the US market. Malaysia only 8.9%. But once it hit that 20%, story change already, right? We are still another 10% of our KLCI, and that means crossing the 200-day moving average. That's the best scenario we are painting in here. Now the worst scenario I'm going to paint to you also, right, where the inflation has not peaked yet. After 8.5 on the 31st of July, this month end, let's say we hit 8.9, right? That means the stock market is going to fall some more. It will test the 50% level in here, which I already given to you. So make sure you watch this video again to know those level in here. Then the crude oil prices continue to rise. Now remember, crude oil prices hit 122, gone back down to around below $90 in here. But it may reach a new level as the Russian-Ukraine war escalate again, the pre-nuclear. That is the really danger zone. Do not know where it's going. And of course, US FOMC, rather than opting to steady the interest rate, which I talked about earlier on, they wanted to raise it faster to fight inflation. Because inflation already gone up from 8.5 to maybe 8.9 or maybe 8.8. Now they want to raise it faster. But remember, what is the favorable action that will be taken by Fed Chairman Jerome Powell? Because he wanted Biden to win, right, in the incoming November midterm election in here. So if that's the case, worst situation where crude oil prices continue to go up, then more recession is coming for year 2023, and this bear market we have to endure longer. So it may be more than 10 months. All right, more than 10 months. If it's not on scenario A, we will be out from it maybe in 1 or 2 more months. So keep that in mind. So those indicate. Of course, you can also follow me from my breakfast show every Monday and every Friday that I'll be doing in here. But I do think this Tonight Live FB, something that I did in the past in the month of May and June, right? That will give you a compass how to go on from here. So you are not caught, right? Remember, the stock market is a forward thinking in here. Now remember, okay, let's take a look at what I believe in here. Now the crude oil peak on the 31st of May. This is the crude oil prices. You can see the yellow one, and this is again, if you have trading view, you can put this in there. It's absolutely free. And the inflation peak on the 30th of June. So you'll notice the inflation is a lagging indicator. So always look on the crude oil. We all know crude oil has started to fall way back in May, all the way to almost the last 2 weeks has been falling and falling and falling. So my hunch is because of the last 3 months or last 2 months crude oil been falling, likelihood crude oil has also peaked. The inflation has also peaked. So this coming August, hopefully, if we get a 8.4 or 8.3, then you'll see this stock market rally back again. That's what I think. Because remember, the inflation always late compared to the crude oil. So always look into the crude oil prices. All right, you can check it out on the trading view. That will be your best, because every economy activity run, unfortunately, on energy resources, which is the crude oil prices in here. All right, so this is the best scenario I'm painting in here. But of course, the sign of a new bull market will only be if and only if it crosses the old, which is the 20%. And from the S&P 500 is 15.5%, 4% more. That's all. So this 4% will come if and only inflation drop below 8.5 in the next 7 or 8 days. Very interesting. So this is how I sort of plan out the scenario for you guys in here. So basically what I'm trying to say, in short, like what Warren say, you have to be patient. We know we are in the bear market. Now, if you run out of unknown, definitely the market will recover. The market will always recover. If there's a bull market, there will always be a bear market. If there's a bear market, there's always be a bull market. So during those bear market, this is where, if you're smart, like Warren Buffett, then you're able to transfer wealth from those who are impatient, who only want to buy when it's confirmed, to those of you who are intelligent and patient. All right? So that's my message in here. And remember what I said on my live FB, those of you who've been following me on the 17th and 23rd of May, the talk that I did 18th of May. How do I know the market is? Because we use the VSA indicator, something that some of you already have, or SMARTRobie in here. So this is the time. So right now we can see red pentagon already out, and that's why the market coming back in here, but already giving you those levels at the retracement level that will give you in here. And again, sometime was in June and July, I've talked about those level in here, and those of you who follow me in here. So remember, the largest wealth transfer is happening right now. The right timing is VSA, where you buy with the lowest entry point in here. Follow the smart money using green pentagon and selling for target profit in here. Now, of course, with our VSA 360 in here, you can see this is the Dow Jones monthly return. For the month of August, right, usually I do think we will probably end up with a positive close, but month of September, for the month of 2020 and 2021, we have very negative quarter. October is a good one. You can see October, but December usually onwards, it's very, very positive. You can see here we got more positive month. So, and take note, the yearly average return for the Dow for the last 6 years has been 13%. So this year we're -9, and I don't think we'll be negative territory, probably maybe minus low single digit, maybe 4-5%. So the market will recover, I can tell you that. That all going to depend on the likelihood of the inflation figures, which will be released in a week or two. So keep that in mind. So something that I want to talk about is our masterclass, and we are in the 5th class that we talk about, and this coming weekend I'll be doing the US and portfolio. So today talk is a preamble to what I'll be sharing on this coming Saturday, start at 9:30 to 12:30. So you can sign up for our masterclass and do a lot of these reattend together, accessing our VSA 360 in our plugin. Some of those charts you have seen in here, where you have a full-time investing coach from myself. I'm an ex-fund manager, sharing with you those techniques that I've talked about, Pentagon Guider, and more importantly, able to mix the returns that you're not been getting from the Malaysian stocks for longer term investing together with US growth stock. All right, so that way you're able to master the US market. And we also give you a guided investor plan builder with VSA 360 tools, right? Just like what we did for our trader in our 20-day trading challenge. We have, while the KLCI market was down 2.6% in here, our trader using the VSA 360 able to make 28%, 23%, and 13%. If you want to get out from the existing issues of not able to achieve making great money, this is a good time for you to do it right now. All right, and here was our winner, Eric, 28%, Kitgo 23%, and Zenly 13.6%, while the KLCI dropped 2.4% in here. So unlike other courses or tools, VSA 360 give you that mentorship that is needed, just like some of our members have clearly defined and able to stand out between the distinct in here. That will help you to make the best investment decision, better returns in here. We are the inventor of the Pentagon Guider, which is a patent in here, so you can find all those products in our SMARTRobie and VSA 360 using the work of Tom Williams in here. Green up, red down, very simple in here. And of course, we are coming to the end of our session in here, and if you want to enjoy the 3-month free usage worth $1,000, stand a chance to win, then review us on Google Play Store. Alright, sorry, review us on Google, review in here, that's a QR code, and all you gotta do is just share in less than 200 words what was the biggest takeaway from tonight's session in here. Okay, so with that, I would, you can also sign up for my newsletter, alright, that we present every day. And of course, for those of you who are ready, sign up for our Trade VSA system in here for the mentorship, for our classes, and our great products that will keep you in great timing in here. Alright, so giving you the first mover advantage. So we are back to the couple of questions. If you have any questions, pencil those in. I'm happy to answer them in here. Right, and don't forget to share our Telegram chat room in here. And this has been a production of Trade VSA. And if you look back 3 or 4 months from right, just like we look back in May and June, was I right? You bet I was right about the market bottoming right now. And I think the two scenarios that I'm giving to you will put you in great advantage compared to those who have not attended so far in here. So thank you for watching. If you have any questions, do pencil inside there, and I'll be great to come back to you. There's a question in here. Sifu, what's the definition of hawkish? Hawkish means they're going to be raising very, very high interest rate, which means they are not what we call the accommodating, right? Remember, there's always QE and QT. QE is easing, means more money flowing. That's being dovish. Hawkish means everything is so kurang sikit. Everything is so kurang sikit. So kurang sikit means they don't want to have so much cash in there, so they will tighten it. Tighten means they'll raise interest rate. That will, in short, if it's hawkish, bear market prolong longer. So everything we want to be dovish, then we have a nice bull market in here. So thank you for watching, and hope that you'll share this video in your timeline again. And thank you for your time, and I'll see you on Friday for our breakfast show in here. And for those of you who want to sign up for our masterclass, I'll see you this coming Saturday for our US market portfolio, a great product where for you, giving you more chance to win, and great for you to be mentored by myself and my team in here. So that's all I have tonight in here, and I hope to see you in one of my classes in my masterclass. Thank you for watching. Thank you. Bye-bye.